Good morning. So, third third month of investing, and yeah, it's a little crazy. It's also hard to believe that in the past 4 weeks we've had like record lows, record highs. Like I think the Dow surged more than it surged in 87 years, but it had just dropped 30% in like the shortest amount of time ever. It's crazy because of the coronavirus, and I have my own opinions about the coronavirus, but you know what? I'll just leave it at that. So yeah, hey, just a portfolio checkup. So yeah, this month with the whole $1,000 a month, I bought a little bit more of Goodyear tire and rubber, United Healthcare, XLE, which is an exchange traded fund. If you don't know what that is, it's basically just a mutual fund that trades like a stock. But this particular fund holds 30 of the best energy companies in the S&P 500. So another way you could look at that is these are the best energy companies in the world. And yes, they're being beat up right now because oil is $20 a barrel, which I never thought I would say, but hey, the cure for $20 barrel of oil is $20 barrel of oil. So I'm pretty sure that that'll fix itself. I don't know how long it'll take, but I'm pretty sure it's going to fix itself. The other one, oh yeah, still loading up a little bit on LUV, Southwest Airlines. I'll explain that one in a minute. Hennessy Advisors, Tyson, because people are going to eat chicken even in a depression. So buy chicken. And then yeah, Valero, so a little more energy. And that particular company, because they're one of the most well capitalized and they don't have a lot of debt. And going forward, and in any environment, but especially in the environment that we're in now, you need companies that don't have a lot of debt. A company can shut its doors for a year if it had to and be fine if it doesn't have a lot of debt. But if it has a lot of debt, it can't shut its doors for a day. I mean, because it'll be insolvent within weeks, Not to harp on debt, but that's one of the key factors in making an investment decision. If you can, one, pick a company, but if your managers, so to speak, and the companies that you're buying, which is what you're doing when you buy a stock, can grow the company, pay you more money, and do it without any debt, so that basically you own that company, the bank doesn't own that company, I mean, it's a no-brainer. And so that's the biggest thing when it comes to selecting these companies, or at least that's what I'm doing. And again, I think I'm going to pull off some pretty impressive returns in the next 8 years. I think I'm going to even beat Warren Buffett himself. That's bold to say. I understand how bold that is to say. But we'll see. The other thing I want to point out in the current portfolio, so to speak, is so I spent $100 to basically insure this portfolio a month ago. Not because I had any clue that something bad was going to happen in the next 3 weeks. I was basically buying insurance in case something bad happened in the next 2 years. It just literally happened to happen 3 weeks later. But anywho, but why CarMax? Why would I buy a put option on CarMax? Well, exactly what I've been talking about. So it's heavily leveraged. So if you do just a quick Google search for debt to equity of CarMax, it comes up, and just about any site that you're going to go to is going to tell you it's 4. And if you dig into it and you actually value the company, even if you look at what it's valued at today and base its debt off of that, that debt to equity ratio actually goes to 8. But even if it was just 4, that's still insane. Ford Motor Company, which is one of the most indebted auto manufacturers out there, is not even, they're around 2-to-1, which is extremely high. So for a smaller, much less, I don't know how to say it, but much less well ingrained. In other words, the government's not going to come bail out CarMax. They may bail out Ford, but they're not going to bail out CarMax. And so for them to take that much risk and that much debt is just crazy. And the other thing about it is, so when you do your research on a company like CarMax, you'll find that most of their executives, including the executive vice president of finance, has sold half of his shares. Yet they borrowed $1 billion each year for the past 2 years to repurchase their own shares. they always repurchase their own shares, but they've racked up an insane amount of debt in the past just 2 years to repurchase their own shares. Yet all the executives are dumping as fast as they legally can, and it is legal. Shouldn't be, but hey. So yeah, there you go. That's why I picked CarMax. So, and if you look at this, what you'll see is that this $100 insurance policy, so to speak, is now worth over $1,000. And so you say, well, why don't you sell it? Like, why don't you cash that in? Well, that's not what that's for. And so I'm going to keep investing for the next 2 years. But if things get really bad, I have no doubt that company will go under. And if it does, that insurance contract, so to speak, would pay out $4,500. And at the end of 2 years, if I've invested, you know, what 12 times 2 would be $24,000. Well, that $4,000 would basically cover what I'm probably going to have in losses. And so it wasn't meant to let me put $100 in here and make 10 times my money and, you know, call myself a genius. Like that's not what that is. And a lot of people get these, what they are, derivative, I can't even say it, derivative contracts. You know, they're really misunderstood, but you should really only use them for like an insurance policy. And so I'm not going to sell them, because if things get bad in the next year, well, then all this money that I'm investing over that year, it will be, the assets I'm buying will be worth a lot less. And so I need something to hedge that risk. But yeah, so that's why CarMax. I had some other notes here. Oh yeah. So why Southwest? Okay, so am I some sort of genius that I picked Southwest versus Delta, American, and United, which are now all begging for a bailout? No, I'm not a genius at all. I just know how to Google. Literally, you could Google, right? If you wanted to invest in an airline company, you could look at one factor and pick the best airline company. That one factor is what I always say, and I know people get tired of me saying it, but it's the debt to equity. So Southwest, of all the big airlines, and I get they are a little bit smaller than Delta and American and United, but they're still pretty large and in that category. But the thing is, they have managed to show great profit margins, run the business well, and to top it all off, they did it with very little to no debt at all. Meanwhile, Delta, American, and United are racking up debt like crazy. Oh, and shocker, when there's a problem, whether it be the coronavirus or anything else, within the first 10 days of a serious problem in the economy, which anybody in that business knows is going to happen at some point, they're all at the White House asking for a bailout because they've racked up so much debt for the past few years. Anyway, it is what it is. But so if you want to buy an airline, and I highly recommend you do, because I think in the next 6 months you'll see the airline industry, you know, pick up again. However, and I don't laugh, but anyway, I laugh at these executives who've been morons. But you're gonna have Southwest outperform all of them because they will have all these constraints and rules that are imposed on their new creditors, i.e. the government, whereas Southwest doesn't have a whole lot of debt, can absorb excess capacity, they could expand, they could really do whatever they want to because they're a well-run business and they don't have a boatload of debt. So, but anyway, that's just my 2 cents. So, but yeah, so that's the portfolio checkup for this month. And yeah, I would just tell you, if you know, for the 20 people that do listen to me, thank you very much. But yeah, no, seriously, things could get bad. We could go into a depression. Pretty sure we're already in a recession. I actually think we were in a recession, albeit mild at the beginning of the year. And there's economic data to sort of back that up. But we know that we're in a recession now. And it could get bad in the next 6 months to 2 years. You know, you can't put a time on this sort of thing, but yeah, you just keep investing. You don't quit. You do it every month and you keep going. So good luck, stay safe out there, and yeah, I'll see you in a month.